I'd like to ask you, Nobu Iguchi, what is the biggest risk?
Yeah, that's a very deep question, but I think let me try kind of the short term and the long term, if I may. I think in the short term, so this is May, right? May of 2022. The world is looking increasingly uncertain. The economy is looking increasingly uncertain. The inflation is through the roof. There's no indication it's subsiding, and there's not a question that the Fed is going to keep raising interest rates. Even if they keep raising interest rates, which is basically, I think at this point, a given, the question becomes, is the interest rate, is the inflation actually going to come down? And let's say it stabilizes at 4%, 5%. I mean, is that acceptable to the Fed? And the likely answer is no, because they want the 2% interest rate, which is good for the economy, and that's their mandate. So if that's not acceptable, they may have to keep bring interest rates even further up, which is a substantial risk for the assets, asset prices in general, real estate, and also public market assets and private market assets, and also it's a risk to the economy. So it could lead to more job losses, unfortunately, and so on. So in the short term, that to me seems like a huge risk for many of us at different contexts. It could be about our jobs. Let's say, from an investor standpoint, for portfolio companies, the companies that we've invested in, I think that's a huge risk. They should prepare for it. So, for example, having not just having 6 months of cash in the bank, but 18 months of cash in the bank, just in case there's a substantial slowdown in the economy, they find it challenging to raise capital and so on and so forth. For real estate operators, it's the same where, even though COVID's, in the United States seems to be, to a large degree, not a big factor anymore, and people are coming back to the office, perhaps that's going to have a substantially negative impact on companies' willingness to have more office space, right? So I think that to me seems like a short-term big risk of and then thinking through what the buffer should be in each case, in one's case, to prepare for the future. In the long term, what we see is, and apologies for you, I have allergy today, but in the long term, what I would say is, even though, let's say with that sort of outlook, technology companies, you've seen NASDAQ down a lot. You've seen venture valuation down a lot, right? And so on and so forth. But in the long term, we're very bullish still in technology, on technology. And in fact, some of the best technology companies, including, let's say, Airbnb in real estate space, came out of basically a recessionary period. So even though that seems like a huge risk to have technology exposure, in the long term, there's a ton of risk in not investing in technology. So we talked about Web3 as one example. You don't have to necessarily invest in every single Web3 company or adopt anything that comes out, but at least keeping track of what's in the space, and even investing, let's say, as a real estate operator, investor, and so on and so forth in some of these, I think actually in a lot of ways mitigates risk, because there is a risk of obviously investing and failing in that, but there's also other risk, which is you don't invest. And 5 years, 10 years later, you're kind of left behind, right? And so I think in the short term, there is a kind of inflation risk that could lead to potentially a recession, that could lead to asset price coming down even further. In the long term, the risk is in not investing in technology and thereby being left behind.